please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, Ashwani Gujral is with us to discuss the technicals of the market. Now, Ashwani, over to you. Bank Nifty down 0.7%, Nifty PSU Bank Index down 2%, and the Nifty is fairly resilient as compared to those two indices.
See, Nifty is range bound, basically 10,350, 10,450. Now, the move in the morning, the shakeout was in the Bank Nifty, and that was there because last week you had an extraordinary rally. So it was a give back the moment you got any sort of excuse. But what's clearly visible is that at lower levels there is short covering on Bank Nifty, probably even some fresh buying. So if the trade in the morning was to get short on Bank Nifty, I think now we are long and the trade is on the upside. You could recover 100, 120 points from here. It's only a dollar rise in crude, and I think banks can move forward. Plus, it does not seem like a fundamental rise in crude prices. So given that, I think a bit of short covering on banks can happen.
Ashwani, morning. What would you trade?
See, on the trading side, I think FMCG is doing very well whenever inflation concerns kind of pick up. Jubilant Food is a buy with a stop of 2,400, target of 2,550. HDFC is a buy with a stop of 1,800, target of 1,865. And HUL is a buy with a stop of 1,385, target of 1,440.
Okay, we got some questions on Twitter. From one is coming in from Amay, who wants to know if Mahanagar gas is a good buy at current levels.
See, MGL has never really performed in line with the gas stocks. So if I were in his place, I would probably get into an IGL instead of MGL, which is weak and is trading below its 200-day moving average.
Okay, and we got another one. Dhananjay has 6,000 shares of Motherson Sumi. We paid 345 rupees each for them. Wants to know if he should hold or sell. Well,
it's a long-term hold and the stop is fairly close by at 300. So I think next target for him should be closer to 450. Definitely add on all sorts of declines and hold it for the long term.
Okay, Ashwani, thanks very much. We will speak again in an hour's time. Thanks for joining in as always. Page Industries will come up. It's spiking at the day's high. 1.25% is what it's got. 14 points lower on the Nifty. 10,387 is where we are at on the index. So not quite, breaking into the green, but not. I mean, it's way off the lows as well. Now 40 points off the lows on the Nifty.
Well, it is oil marketing companies which are really under pressure. Around a 6 to 7% knock is what the likes of HPCL, IOC and BPCL are showing at this point in time. This is on reports which have suggested that the government has asked oil companies to absorb a price hike of 1 rupee per litre. Prashant is here to detail the potential impact on marketing margins for all of these OMCs. Prashant.
Thanks for that. I mean, so stocks are selling off. Take a look at something like an IOC. IOC got to about 164 odd rupees or so. This is the lowest point it got to recently. And from there, it had bounced to about 185 odd rupees or so. It's cracked almost 7% back to the recent lows of about 167. So this is, big selling coming through on the oil marketing companies. And the reason is essentially agencies, and I want to be very clear, we don't have independent confirmation, but agencies putting information out that the government is set to ask oil companies, oil marketing companies, to absorb a 1 rupee per litre increase. So again, this is agencies, no confirmation. The government is, of course, also set to rule out excise cut to lower prices. This is something that senior government officials did confirm to CNBC TV18 some time back. But the thing is, oil marketing companies, oil companies have to absorb a 1 rupee hike. What will this really mean? You just have to look at the gross marketing margins which companies are making on both petrol and diesel. I'm talking about oil marketing company margins. They are between right now 3.3 to about 3.4 rupees per litre on for both petrol and diesel. Now, this is actually much better than what oil marketing companies used to make over the last couple of years. I mean, the average used to be about 2.5 odd rupees or so a litre. That is, they're making about a rupee more. So the bump is fairly recent. And what the current marketing margins imply is a much higher level of crude oil, which means that even at $70 odd dollars a barrel of oil prices, oil marketing companies don't really, at this point, don't need to increase prices. If companies are asked to absorb a rupee increase and not pass it on, it would mean that marketing margins basically would go back to what was kind of the normal marketing margins, which is about 2.5 odd rupees, which was there for the last, couple of years actually, before this recent bump up to the 3 rupee plus kind of region. So, I mean, it gets more normalized. The excess is taken out. That's what the 1 rupee absorption will do. So it seems it is not immediately going to impact oil marketing companies very much. We don't know whether upstream companies, Oil India, ONGC, will be asked to share the burden. But if they do, then the impact on oil marketing companies is further reduced. But the big worry is essentially really going to be whether we are basically junking deregulation of petrol and diesel prices. We are junking free market pricing for petrol and diesel and going back to the earlier era when there used to be under recoveries across the oil and gas complex between oil marketing companies and upstream companies. I mean, they always used to share every year. That is the real worry. And I think the reason why the worry is coming through is because, as we saw in 2017, late 2017, around the time of an important state election, companies did not pass on increases even as international oil prices were going up. After the state election, I mean, there was a frenzied sort of ramp up in oil prices by oil marketing companies, and all the losses were recouped. Will we, with a couple of state elections lined up through the course of 2018, will we see this repeat over and over again? Suppression of required increases before elections, and after the elections, companies coming and increasing prices once again. So I think it's a politically hot year, 2018, and oil has always been a politically hot subject, keeping stocks under pressure. Back to you, Ekta.
Yes, absolutely, Prashant. In fact, staying with this story, we spoke to energy expert Narendra Taneja, who said that discussions have been going on between the government and OMCs, but insists that there is no discussion on excise, at least today.
The petrol, diesel are decontrolled commodities, as you know, so the government can't really issue any instructions as such. But government being the biggest stakeholder in these companies, they can always have conversation on these lines so that the trust of the consumer, who is the most important person, is maintained. We see prices moving only in one direction, that's up and up. So I think it's to win the confidence of the consumer at this stage without really, upsetting any kind of the order which is in place. The government has asked the companies very clearly that they should, do their best in order to pass on the maximum possible benefit to the consumers. I don't expect the prices to go up to that level simply because demand and supply fundamentals are perfect. At the moment, there is no proposal. It has been discussed with the Ministry of Finance, but the Petroleum Ministry has said, but the Petroleum Finance Ministry is in no mood at the moment to have even any discussion on excise. But the companies have been asked to do their level best so that they can pass on the maximum benefit to the consumer.
It's off now on the Nifty. 10,384 is where we stand. Anish Damani, as CEO and Head of Institutional Equities at IDFC Securities, is joining us. Anish, good morning. Good to have you here. How would you look at this news flash from agencies with regards to oil marketing companies being asked to absorb the 1 rupee hike for petrol and diesel? First of all, do you think we will get a clarification sooner than later from the government? It's happened before. Or do you think we won't get either a clarification or a confirmation? I mean, you've got elections coming up in an important state like Karnataka.
Yeah, I don't think you will get a... Yeah, so I don't think you're going to get a clarification and government officially asking the oil companies to do that, because the oil companies have the right to increase the prices now on a daily basis, or as per or increase or reduce the prices. So if we'll have to see how that kind of pans itself, because in the last one clearly we saw that the oil companies did not increase prices, and obviously the marketing margins tapered off. But after that, what we saw is that they kind of increased the prices to such an extent that they were kind of recouping some of the losses which they had incurred over those 2 months where they had not increased prices. So typically, there could be a game where you might not see increase in prices in line with the diesel prices globally, and as a result, you might see some squeeze in margins. But that is something which I don't know whether it will happen or not. But however, this kind of news flow will keep impacting you as you know, in the last elections, obviously, it had played itself out. However, having said that, we have seen that the stocks have corrected significantly on the back of that, and we feel that probably if this does not happen, there is a good opportunity for people to buy into the stock, and if it does happen, then to an extent it is kind of discounted.
Okay, Anish, hi, morning. We've been talking a lot about elections. This is obviously what's happening with the OMCs is a facet of the larger issue which the markets might face, which is basically first the Karnataka election and then eventually the general election. So from that perspective, election per se, how much of a risk is it for the markets?
So I think more than that, what you need to see is that the government has started focusing on the rural areas, and therefore you might start seeing increase in spending by the government, which would mean that the consumption demand will continue to remain robust. So from an equity market standpoint, what we need to see is that who are the beneficiaries of the improved consumption demand as it can come through over the next few quarters. So that is something which is going to be one of the key areas where we should look at our investment opportunities in.
Anish, any interest in the twin troubled banks, private banks?
So we like ICICI Bank, and we are neutral on Axis Bank. So we feel that these are opportunities, you know, which in a scenario like this get created as you know, this is one-time kind of thing which has happened, and if you extrapolate it over the year, probably things may not be looking as bad as what they are looking today given the news flow. So we like ICICI Bank, and probably we will kind of through this phase will recommend ICICI Bank over Axis.
You know, Ekta, we were just talking with Anish, and I started the conversation whether we will get a clarification or a confirmation from either the OMCs or the government with regards to news which took the stocks lower. So oil marketing companies are saying, and we don't know where this is coming from and which oil marketing companies, or all of them are saying, that no directive from the government to not hike fuel prices if so required. Stocks are inching up a little bit. But, you know, I think for something like this, we would need a...
hike.
No, yeah. So, yeah. I mean, the proof of the pudding is in the eating, as they say. But I think at this point, I mean, because there's no hike required, at this point, to clarify the matter, more than OMCs, we need a clarification from the government. Maybe the minister saying that they're absolutely free to increase prices if global prices move up and to keep pace. Because, you know, we saw this around the Gujarat state elections time in 2017. You know, they put up the gross margins on the website, on the oil marketing website every day, because prices change every day. So that used to reflect that gross marketing margins are going lower and lower and lower. But we never got any clarification from the government or the OMC saying, we're not doing it because we've been told to do so, etc. So it was almost implicit. But what happened is, after the state elections had passed, I mean, a gross margin started expanding pretty quickly as companies took those price increases. So for now, I think oil marketing companies are saying that, well, we've not been told by the government not to increase fuel prices, but I don't know if this is enough. We need maybe a comment or two from the government which will which will also help. Actually, I mean, you know, the government, for example, was waiting for divestment in IOC, right? I mean, this year. So it is actually in the government's best interest to clarify this matter more than anything else. I mean, stocks are already down between 25 and 30% recently. So if they want great proceeds, they need to clarify this important matter. I don't know if we'll get that or not, but for now, I think we're getting from oil companies that no such instruction has been passed on to them.
Okay, well, you know, Anish, one of the things with regards to Brent crude is also what's happening with bond yields. And I think this is important source-based information which is coming in, where the government is in fact mulling an option of a sovereign bond issue in the overseas market in FY19. And if in case this does happen, this would be the first sovereign bond issue, I think, which would be undertaken. So this would be where they would be tapping the overseas market at a time where maybe there is some amount of pressure of demand which is coming in on the domestic market as well when it comes to bond yields. So that's some news coming in, and we'll get you more details on that at this point in time. But Anish, you know, this bond yield issue that we're discussing, 7.43 is where it's at currently, and compare it to where it was on the day of the RBI policy last week. There's been a significant hardening. What does it mean for equity markets and banks?
Yeah, so we are on a gradual uptrend in the increase in interest rates, and that is expected to happen. However, what we saw that there was a very sharp increase in the bond yields or the government GSEC yields sometime back when the borrowing figures were released about 4 months ago, when they said that they needed 50,000 crores additional borrowings. But the recent figures which released, they talked about lower borrowing program. And as a result, the yields which had hardened substantially came off a bit. Now, what we are seeing is that RBI has given lower inflation guidance as we go forward, and we are seeing inflation easing a little bit. However, the stance remains that rather than probably increasing interest rates, there will be an extended pause by the RBI on the interest rate scenario. Also, you know, we are in a scenario where economy has started to grow, has become robust. We are seeing that from the IIP data which is getting released, from the transactions data which is getting released.
Well, for the markets, the Nifty is just about range bound. We have additional pressure which is coming in on the Bank Nifty, and still, despite those clarifications coming in, we do have HPCL, BPCL, IOC still under pressure, down over 6%. But the other stock in focus is JP Infra that we're tracking. We understand Suraksha ARC is in fact emerged as the front runner to acquire the company. Manisha Natarajan joins in on the phone line with details. Manisha.
Yeah, hi. Yes, that's correct. Suraksha and Adani were two who really submitted revised bids. Kotak did not, and JSW seems to have lost interest in this process, though it's still, you know, the bid is still pending. They've not withdrawn the bid. Now, Suraksha's bid is currently the highest, and Kotak, in fact, has emerged in terms of value as the second highest. Kotak Realty will develop the township and complete the incomplete flats, but Cube will take the highway assets, is what we have learned. Adani, of course, has had a separate meeting with home buyers' representatives, and when the home buyers demanded a delayed penalty, in fact, Adani made a very strong point at the meeting saying that they would like to get an immunity, which other bidders also supported them, saying that any penalty that the home buyers may demand, all the bidders should get an immunity from that. Most bidders are saying that they will only take over the company's incomplete flats and complete them, and the remaining money will go to the bankers. There's a slight twist in the tail because if you remember, IRP had actually filed a case of fraud by Jayaprakash Associates Limited with NCLT, saying that 858 acres of land has been transferred to JAL, which JAL has liened to ICICI. So 3 days ago, ICICI actually sent a plea to NCLT saying that we would like to fight this fraud case, and it seems that in all likelihood, that parcel of land will not come back to JIL. We've heard that IRP is very keen to complete the JIL resolution process. It's also under some pressure from the government because if you remember, out of the 12 companies, this one probably is the least complicated as of now. The final deadline, of course, is May, and we'll keep you updated.